Welcome to Talk Stocks. I'm your host, Keir Reynolds, and today we have Gwen Preston, Vice President Communications with West Red Lake Gold Mines, trades on the TSX Venture Exchange with the ticker WRLG. Got a pretty exciting segment here. Gwen, welcome.
Thank you. So gled to be here. Yes, lots to talk about.
You've had absolutely no news this week. There's nothing to talk about. We're recording on a Friday, and I'm surprised you still want to chat with me with how busy your week's been. I'm sure you're going to be pretty quiet this weekend after all the chatting that you've had to do. So, thank you for fitting me in. And what's one more?
Oh yeah, it's not fitting you in. We've kept up with the story. I so appreciate, and my goal is to have as many people understand the significance of the news, the positive significance of the news that we just put out as possible. So I'm really glad that you took the time to have me on.
Well, we've been following the company for a little while. Obviously took some good note once you joined the team. We'd obviously had a bit of back and forth when you were a newsletter writer. And so know that you don't take it lightly, the names that you'd attach to your name. So anyways, it's been interesting to kind of follow along here. I know it's been probably felt, at times like the best opportunity, and then also probably a little tense when you guys are, doing things that maybe the investment community or shareholders are not fully supportive of. But we've been chatting and alluding to, you guys have had a pretty momentous week. You guys put out the most important news you've had in probably 2 years, and that was the results of processing of your initial sort of bulk sample at the Madsen mine. Would you mind sort of just walking us through kind of, just generally what you guys announced?
Absolutely, yes. So, since we bought the Madsen mine 2 years ago, our goal has been to develop an approach to mining that enables us to deliver to the mill what we expect, right? So that means you got to build a geologic model that's accurate, that captures the tonnage and grade accurately. You got to engineer well around that geologic model, and then you have to mine well so that you can deliver the tons at a gold grade that you expect, because none of your plans are going to play out if, the rock doesn't have the gold in it that you think it's going to have. And so we've been telling everyone for 2 years how and why we're approaching that, like what we're doing in our workflow to make it so that we can achieve that goal. And this bulk sample was our first opportunity to offer proof that it actually works, right? Because we can say what we're doing, we can show models of geology, but this was us mining the first roughly 15,000 tons of the ore that we will mine at Madsen, and then delivering them to the mill and having independent people watching that process. They came in, they were able to see our in-house resource model, which is after all that definition drilling and sampling. You keep updating your model. And so they came in and saw that. They saw the engineered stopes where we plan to mine, what they looked like, tonnage and grade. They watched us mine, they watched us move the ore, they watched us process it, and they watched us crunch the numbers. And so then we were able to deliver these results to market, which is that we mined in 3 different parts of the resource. And that's important. We didn't just choose one area where we thought we would be able to put out a good result. We mined in 3 areas of the resource that are 3 of the areas that will be mining, as we roll into operations here. We wanted to do a representative sample of what the Madsen mine is. So we took tons from Austin, we took tons from South Austin, we took tons from McVeigh, and we were able to mine tons and grade that reconciled almost exactly with what our models said they should do. So we were, if you average across the 3 areas, we were just 0.7% over in terms of grade. We were about, 4 and a bit % under in terms of tons. And so that averages out to say that 96 and a bit % of the gold that we expected to be in the rocks was indeed in the rocks. And our mill recovery was 95%. So that to us is a huge accomplishment. I think the best way that I can summarize what that result means to us is that we aren't changing anything about what we're doing. The bulk sample has just validated our approach. And it means that if we carry on doing the workflow that we established, that we should be able to continue delivering what we expect to the mill. And that's really the that's the starting point of a successful mine. So we're really excited about the results. Happy to talk about where we go from here.
Well, there was a little bit of chatter. You guys, when you put out the news, you traded a gazillion shares, and it's been a pretty liquid market. I don't think anybody would say that your stock is difficult to buy or difficult to sell. It's pretty liquid.
No, very easy.
However, your PFS that you guys put out fairly recently, outlined an initial sort of head grade or an average head grade of about 8.16 grams per ton, while the bulk sample you delivered was a little bit under 6, was 5.72 grams per ton. Pretty meaningful gap. Would you mind sort of explaining to investors how they should interpret this?
Absolutely, for sure. Okay, so first of all, that head grade for the PFS is an average over the mine life, which is lifted because in the last 2 years of the PFS mine life, we pull in that super high grade zone called the 8 zone, where the average grade is 20 grams per ton. So if you go back and look at what the average gold grade expected head grade is for the first few years of the operations, it's like 7.7 grams per ton. So just a little bit of a difference there. So then, like you say, the bulk sample that we mined was like a 5.7 gram per ton average. And we did start the conversation about that difference as we announced these bulk sample results. And that difference is intentional. It's not that if we wanted to mine 7.7 grams per ton, we could mine 7.7 grams per ton. That's what the workflow says. We can identify those lenses and we could mine them if we wanted to. But we are choosing to incorporate additional tons that are close to those very high grade lenses because economically it makes sense to do so when you have a gold price that we do today. So if you take this step back a little bit, when we did that PFS, when you do a technical study, the independent consultants, they have to use a backward looking gold price when they do their first test of which tons of the resource make sense to put in the mine plan. So they used a gold price of $1,680 for that economic viability hurdle, right? Which of these tons should we even think about? And that low gold price created a mine plan that was exclusively focused on the highest grade parts of the deposit. And that mine plan made sense, right? It's a positive mine plan. It was the rationale for us to continue putting the mine into production. But the gold price is, of course, basically twice that price today. And importantly, whether you're operating off a PFS or a feasibility study, every mining company, after doing that study, does more definition drilling and does the detailed engineering, like the detailed plan for exactly how they're going to mine their deposit. And they do that. That's an economic process, right? Of course, it involves geologic data, but at the end of the day, the decision for what size and shape to mine is an economic decision. And so you do that economic calculation using a gold price. You have to. And so we use a gold price in that calculation that's closer to what is now the long-term consensus gold price, which is about $2,350. And that gap, $1,680 to $2,350 as a gold price, means that if you're mining a lens of high-grade mineralization right here, and there's lower-grade mineralization right around it, it often pays to mine those additional tons as well. You've already spent the money to get into that area with a tunnel. And if you mine a wider body, it is a lower cost mining method. You can use long hole stoping rather than the selective cut and fill. So it's an economic decision because you make more money mining more tons, and it brings your grade down slightly, but you make more money, you produce more ounces. And overall, it shows that Madsen has the potential to be basically a bigger operation than that, that study based on that low gold price initially laid out. So it's by choice, and it's by choice to make more money. That's where the difference sits. And I think if we wanted to mine exclusively high grade, we could do that as well. That's what our workflow demonstrates, our ability to do whatever it is that we need to do within the Madsen mine to make the most money for our shareholders.
I think in the news release there was some discussion. You've rightly pointed out that the gold price used in your PFS, $1,680, Well, that seems like a long time ago now, 1680 in terms of gold. It's really, like
Doesn't
you
it?
said, it's
Yeah.
doubled. We're looking at 30, 32, 33, 3400 sort of gold, and people are calling for something else, maybe higher. So I can understand that maybe you'd need to sort of deviate from that. There was also, you did mention just now, but you did mention in the news release that the mining sort of method that's used is quite different. In your PFS, it's cut and fill, and in this, it's long hole stoping. Can you maybe just explain for those that of us that don't, can't really understand, or don't understand the difference? Could you explain kind of the difference? And then traditionally, is there an economics difference in terms of the cost of mining between those two methods?
Yeah, for sure. So cut and fill is basically is the method that enables you to mine more selectively. So smaller lenses, if you want to use that word, of mineralization. And so both of them are about mining, a top cut and developing a top cut and a bottom cut above and below, and then you pull out the mineralization that's in between. But essentially, the difference is that cut and fill, your top and bottom cuts are only a few meters apart, whereas in long hole, your top and bottom cuts are like 20 meters apart. That kind of a difference in scale. And so for long hole to work, you need to have consistent mineralization through that body. You need to want to take all of the tons in that gap. And if you have a more small lenses body of mineralization, that's what you want, then you got to do the smaller method. And that means that maybe then you have to do this lens and then develop a little bit of drive a tunnel over to the next lens and then do that lens and then drive a tunnel over to the next lens and do that lens. So that difference explains why long hole stoping, where you can go above and below, take all of this, is about half the mining cost per ton versus cut and fill. So they are quite different. And I will note that our PFS has both mining methods in it. So our PFS was 40% long hole, 60% cut and fill. At this point, we're operating with 100% long hole. I'm sure there will be cut and fill in places in the Madsen mine, because there will be places where the deposit says that that's what you should do, and or historic workings make it such that to get that juicy bit of ore, you got to do some cut and fill. So we're not against doing cut and fill where it makes economic sense, but it's all economically driven. So yeah, doing the bigger mining method is a lower cost per ton for sure.
All right. Well, great. Thanks for kind of unpacking that. So, I guess a doozy for you when you put out the news. Given that there was some sensitivity sort of around, the previous operator. You guys have been the benefactor of being able to get, a huge amount of infrastructure for kind of pennies on the dollar, kind of deal of the century, some might say. Some, I think, have said. So you guys are the benefactor of that, but there was also quite a lot of, you guys are sort of still in the prove it stage. You gotta well, I guess the show me stage. You gotta show me and then prove it that you can repeat it. But there was some sensitivity sort of around the past operator who had estimates of certain head grade, and then the actual sort of results. There was quite a disparity. They could never really deliver grade. I know you guys have addressed things to sort of drill tighter spacing and adjust your mine plan, do drifts, all sorts of things to make the mine sort of your mine plan more efficient and different. But I was surprised a little bit to sort of see that there was kind of this difference due to the mining method and head grade. He explained it, but it was quite an explanation in a news release. Did you guys sort of do anything sort of ahead of the news to sort of like set the stage for that sort of thing with the shareholder base?
Yeah, so we've talked about it. This is an interesting moment, right? We have a pre-feasibility study that is our official mine plan, and it was the basis of the board's decision to proceed, and that's an important document, and it is undeniably the base case. That's how we always see our pre-feasibility study. At the very least, in our estimation, we will deliver the base case. And I say we will deliver the economics of the base case, right? So think of it that way. Every mine ends up varying from their official mine plan, whether like as through time or through learning more about their deposit or through changes in the metal price. Every mine actually operates with some variance from their official mine plan. And so in our case, because the PFS had that very conservative gold price in it and the gold market is doing what it's doing, maybe our time window, the usual time frame over which that variance plays out has shrunk a little. It's been a little bit compressed. And so, and usually these differences end up, because you've got that time, the market can sort of get used to it. And get used to it by seeing the economics, right? Okay, it makes sense to mine at that grade instead of that grade because they're making this kind of cash flow from it, right? That's the usual order of this. Again, our time frame has been condensed, and we are just on the cusp of starting into production. That's a decision that we expect the board to support in the next couple coming weeks here. And then we'll go through ramp up. Then we'll be in a position to start talking about like our costs and our cash flows. So again, it's like everything at Madsen, right? We like had to put a whole bunch of money into the mine before we could tell anybody what the mine plan was, because we bought a mine that was built, but it needed a bunch of fundamental work. Now we're sort of repeating that slightly backwards situation by saying, we will make more money. We expect that we're going to make more money by doing things a little bit differently, but we're going to have to get there before we can declare commercial production and show you those numbers. So again, I guess it remains a show me story on that side of things. But when I go to the mine, one of the things that I do is I spend time with our engineers, and they have these very cool spreadsheets. I'm a dork and I love them, that are how they design stopes. And they literally are like the killer mine spreadsheets. And you can play with the gold price and it changes, whether the stope is economic or not. And you can change like the exact shaping of the stope, and it runs through the whole model. And it's really cool to see, to play with it and look at, okay, if I put a $1,700 gold price in here, that's what the stopes look like. If I put a $2,300 gold price in here, that's what the stopes look like, and that's what the cash flow looks like. It's really cool to see. And so we are mining this asset based on maximum economic extraction, maximum economic benefit. That's what we're doing. So, and we're planning, we're going to try and help the market understand that as best we can as we move towards commercial production and being able to sort of lay the cards out fully on the table.
So I imagine you're probably pretty busy. I think it was, Wednesday actually when you put out your news on May 7th. What sorts of incoming emails and calls were you sort of having to field, you and the team having to field?
Yeah, it hasn't been so... It's been all pretty much the conversation that we've had, like explain what it is, explain why it is, talk about the grade, talk about the mining method, and then talk about what's next, right? What have you done for me lately? That's the joke always in investor relations. You put out a big news release and then people are like, what's next? What's next? And fair enough. The stock market is a forward-looking valuation mechanism, and so they should wonder what's next. And so for us, we expect to have a good steady stream of news here over the next couple of weeks while we haven't put out a set of definition drill results from Madsen in about 8 weeks, and we usually put them out about every 6 or 8 weeks. So we're on track to deliver some more drill results. Drill results aren't going to move the needle fundamentally, but I think what they do is when we hit into one of those nice pockets of mineralization, like we did in late February when we drilled the 114 grams per ton over 10 meters in South Austin, they just remind people that Red Lake is worth the effort. The gold systems here are very rich, and so that's what makes it worth the effort. And so we expect to have another set of definition drill results coming out here pretty soon. And then I mentioned, we take this bulk sample results and we deliver it to the board, and then we expect the board to support our plan, which is to turn this mine back on in the coming weeks. And so there'll be a couple news releases around that, including some more conversation about what we've talked about here today about mine plan, mine method, and our approach to that. And then we have a few more things that we're planning on talking about. So there's a lot still coming. This bulk sample, hugely important validation of the approach, really helpful internally too. Our team worked super hard to get to where we are. So it's a really encouraging milestone to get through with such success, validation for the market. And then let's just carry on. We did that for one reason. And the reason was so that we could put this mine successfully into production. So our eyes still remain very much on that prize.
What's the investor feedback been like so far?
I mean, like I say, there haven't been a huge number of pointed questions. We've talked about the grade and had exactly the conversation that you and I are having right here. I think the reconciliation, there's not a lot to ask about the reconciliation. It was so close. And Red Lake, like I say, Red Lake is worth the effort because it can be so rich, but rich systems require the work, right? You got to do a lot of definition drilling. So for a system with high grade variability to deliver, for a team to be able to deliver reconciliation results this tight on a gold deposit that has this kind of grade variability, it's really standout. And so, that's basically been the conversation. There hasn't been anything really outside of the box.
Great. Well, that sounds good. On to your next news release. You had one yesterday where you actually stated that you sold most of that gold that was produced. I guess just under around 2,400 ounces. You were able to raise US 7.7 million in proceeds from the sale of that. How does that sort of impact your treasury?
Yeah, I mean, so we had certainly accounted for the fact that we were going to produce and sell gold in the bulk sample as part of our cash flow forecasting for this year, as part of our budgeting. The fact that we achieved an average sales price of almost $3,300 per ounce was higher than what we had put in that forecast. So that's really nice. And so, as you and I have talked about before, we expect that the remaining tranche of the Nabari financing that remains available to us, plus this cash flow, plus the cash that we have in the bank, is enough to get our project to back into production, which is, like I mentioned, now only weeks away. And it's also nice that the higher gold price does lower, make it easier to make money at Madsen overall. That's what a gold price always does. And so, as you go through ramp up, often the first little while of ramp up, mines can be just at the cash flow neutral point. We're optimistic that we understand that we're going to be making money as soon as we turn this mine on. So we're there. It's right there. It's right around the corner.
So I ask you every time, and I make you squirm, put you on the hot seat. So I'm going to ask yet again, just to see. One day I'll put a reel together of all the questions and answers. We'll see how consistent you are. Does that sale of gold and the access to the Nabari mean that you will not need to raise any more money for 2025, or is there always an opportunity, always potentially a need, and it's maybe out of your control?
So we expect that we have the money that we need to put the mine into production. As a company that is always looking to create the most benefit for our investors, there's opportunities out there in this gold market that will fly away as the equity side of this gold market catches up a bit with the gold price side of this market. And so we're pretty interested in what else we can do. And so, if there's other things that we can do within West Red Lake to make this company able to deliver more for its shareholders, we'll see what that might do. So I'm certainly not going to close the door on what financings or might be involved in any kind of growth opportunities that come our way. But our budget forecast has that we have the money that we need to get the Madsen mine into production.
Excellent. Well, thank you. Thanks for answering that. I'm sure everybody will be hanging on pins and needles looking for the answer for that. So that's great. So you completed a bulk sample. When's this thing getting into full commercial production? What's next in terms of what's the next step? You said you're only as good as what you've done for me lately. Like, okay, what? Well, yeah, now my turn. Sort of, you laid out a few general things, but what's the next sort of steps look like on the road to getting to full commercial production for this?
Yeah. So the first step is to getting into production. we're going to, like, we've delivered, the board of directors has now seen the results of this bulk sample, and we certainly expect them shortly to support management's recommendation that we put this thing into production, and we do so soon. Right now, what we're doing, we never stopped mining after mining our bulk sample. We continued mining. That mining has been building our stockpile of high grade material. You always want to have like a month at least of high grade material stockpiled as your just in case stockpile. That's what every mine does. And so we're making sure that that stockpile is in place as needed. And then we expect to start, instead of taking mineralization from the mine to the stockpile, we expect soon to start taking mineralization from the mine into the mill, as in running this operation. And that's like in the coming weeks. So that's the next big thing for sure. And our expectation is to start this thing at something like 600 tons per day, around that mark, and then ramp up over the second half of the year to 800 tons per day. It's not a big difference in tonnage, but you just want to make sure that you aren't pushing your crews underground for more than they can sustainably deliver until, you know, they are able to deliver that. And so that's the process that we've been in already. This bulk sample was incredibly useful in getting our crews going underground at the mill. There's always hiccups. Mines are really complicated machines. And so, you know, getting the mill restarted, dealing with all the little questions that you got to answer when you restart the mill, that's been an incredibly valuable process that we've just gone through. Ramping up your ability to deliver material from the underground is also a process. We've gone through a lot of that process as we mined the bulk sample, and we will continue that process as we start to ramp up operations. So yeah, let's get it into production. Let's start at the rate at 600 tons per day, and let's push ourselves up to 800 tons per day, and then get ourselves in a position to be looking at a commercial production declaration sometime near the end of the year.
So, what's on the agenda for you in terms of getting out and telling this sort of new emerging gold production story? Do you have some events that you're doing? Any road shows, any trips, anything anywhere that maybe some potential shareholders, investors might be able to meet with you?
Yeah.
Face?
Yeah, absolutely. So I'm going down to Atlanta next week for a conference in Atlanta. I'm also doing a lunch and I think a dinner while I'm there in Atlanta. Then after that, home for a week, or maybe it's two. I start to lose track of the calendar a little bit. Then spending a little bit of time in New York, and then going to the Quebec City conference. So that's a good one. If anybody is really interested, would like to meet, there's good opportunity to come to that. The Mining Event of the North that happens in Quebec City in the early days of June. That's a good conference to go to. And then certainly the next official conference will be Rick Rule's conference down in Boca, which happens, I think, the 7th to the 11th of July. And in between that, I mean, I do multiple virtual events and additional road shows, both virtual and in person. This is my full-time gig here. If anyone's interested, we do have a conferences tab on our website, so they're always there. And that's really helpful for people who might even just be interested in tuning into a virtual presentation where there's often a Q&A opportunity. So yeah, lots of, hopefully that provides enough opportunity for people to get in touch.
Yeah, maybe just one other point. You guys put out some good emails where you kind of explain, the significance of your news, and also like what it means, what a mill does. I guess there's another one coming, which is going to talk about the refining of gold, the gold refinery. So, that's also good as well for just kind of an understanding of on a granular nature of like what a emerging gold producer sort of going through and what the various equipment kind of does. Based upon the news you had the other day, and kind of the overall kind of market for sort of juniors and gold and mining companies and things like that, you're starting to get some more institutional level sort of like calls or inquiries in terms of wanting to meet the company kind of for the first time.
Yeah, that's been really interesting, actually. Even just this week, since putting out the bulk sample results, I fielded quite a few that were interesting, and that's something that had been building a little bit. Even certainly since putting out the official mine plan, the PFS, and then as the gold market really started to move in March and April. I am seeing, not in huge numbers, but absolutely for real, seeing those institutions reaching out and just looking for opportunities to deploy capital into, leveraged gold stories. So yeah, I'm seeing it. I'll always be happy to see a bit more, but I'm absolutely seeing it, which is exciting for as a gold investor, let alone as a West Red Lake aficionado. It's exciting as a gold investor for me to see that that institutional interest, I think, turning to the space.
If I'm not mistaken, did you guys pick up some new or some updated analyst coverage recently that had a price target of 250 a share? If I'm not mistaken.
There hasn't been any new, but I think there's a 250 a share from, I believe that's the Velocity Trade report that Paul O'Brien put out, has 250 a share. And we have similar price targets from Cantor Fitzgerald and Raymond James and Red Cloud. Those are our four analysts. But I am bringing a whole slew of analysts down to site in about 5 weeks. And some of them I'm working hard to reel in. So let's see if we can get a few more price targets out there in 2 months.
Excellent. Well, Gwen, I really appreciate you taking some time and sort of unpacking the important news release and important week of news for the company. Congratulations on such a, hitting such a key milestone. In terms of what you said, we had about 95% of gold. You guys, tons came in a little light, but if you were to extrapolate that out, I think you got even closer to your reconciliation of estimated sort of gold. You're just a bit light on tons. Anyways, that's some good stuff. Let's hope that sort of continues, and really look forward to catching up with you here in, I don't know, sometime over the summer when you've made your next sort of significant news and hit your next milestone.
I'll do my best to deliver one of those soon so that we can talk again soon. How about that?
All right. Thanks so much. Have a good one.
You too. Thanks, Kier.